Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. All right. Well, we got 3 minutes. I'm a little bit behind here today. I'm still eating, but we've got a really important PCE number coming up after all of the mess that we had yesterday, kind of suggesting that price pressures continued to be there in the last quarter. There is kind of some question as to, whether that's really what that number is reflecting. And what we're going to get here in the PCE is going to be a really good confirmation for whether or not that's true. So the market is probably going to react very strongly to this PCE either way that it goes. If it comes out that the median estimate is spot 3, if it comes out at spot 3, you're probably going to see this market just take off. Because then that would kind of suggest that the price index pressure that we saw in the numbers yesterday was really mostly about seasonal adjustments, right? So I have a little bit of food. I'm going to try and eat as much of it as I can here before we get the news in about 2 minutes. All right, here we go. They're pulling like it's a non-farms. Good grief. Whoosh. Oh, man. Oh, wow. Okay, US PCE price index in line with expectations. Markets up big as expected. Wow. Okay, it is coming back a lot, though. So let's look at the other numbers. Price index year over year was slightly higher than expected, 2.7 versus 2.6. Consumer spending higher than anticipated, spot 8 versus spot 6. Personal income in line, spot 5 versus spot 5. And real personal consumption month over month, spot 5 versus spot 3. So some of these numbers actually are kind of hinting like we're still a little bit hot. But that PCE number was, they're going to love that. It's coming back. I think this is like really risky trading, but I'm gonna try here with sim account. Well, let's see here. It only gave me one contract there, huh? Hmm. Oh, thank you, sir. You're gonna put the spoof in so that I get filled at 18.5. I don't think that they're gonna do it. You see that? Oh, I really hate it when, like, even though I'm on sim, it feels like the market is reacting to me, you know? Oh, that's funny. We got to be careful because even though the headline number was big, there's a lot of subcomponents in CPI or in PCE, and there's a lot of nuance that can be read into the report. So this pullback could be reflective of that. Could be just a crazy pullback. I don't know. It's pulling back a lot more than it pulled back yesterday, though, isn't it? In fact, let's see here. Into our chart. Yeah. You can kind of see how they didn't even completely retrace the down move from yesterday. I don't know what to think of that. That's very interesting. So let's do a couple of things. First of all, I haven't said hello to everybody. Good morning, Octavius, Alan, White, A. Paul, Uzi, Rob, Robert, Smitty. I'm feeling pretty good this morning. Let's come and look at the charts a little bit more closely. So here we have the E-mini. We have a big push down yesterday off of that preliminary GDP data, and now we'll push back up on the PCE. S&P 500 kind of doing okay though with earnings, and I think it was Google yesterday that was like up 10%, so that's what's helping them. Oh, we're still down a pretty good clip from, you know, where we were. So oil trying to head higher, but still a little constrained, I think. Gold and silver, okay, good, nice little slight uptrend after that big fall a few days ago. And copper just looks amazing. And then the Japanese yen. Oh man. Okay, so remember that we had the interest rate decision for the Japanese central bank last night, and they pushed lower, and then, which was probably intervention, but we don't really know for, don't have that confirmed, but intervention came in and really slammed them up higher, but that was very short-lived and we are now down. So this, man, they are really pushing the Japanese hard. It's just crazy. And well, I mean, the Japanese are kind of adopting a dovish stance right now, so that's gonna be on my mind all day. And then Bitcoin just just kind of meh. Good morning, Andre. Okay. Pull our terminal up here. Big terminal. Well, I'm feeling really good today, but sometimes when I'm like early in the morning, I'm like my pinky will kind of shake if I really be holding down shift hard. So that's happening. That's interesting. Maybe I'm not as really feeling good as I think. All right, flows. So PCE closely watched due to yesterday's move. Okay. We're also going to have U of M sentiment. That may be why this is like falling back so quickly. Nothing after that, but we should note the and interest rate decision overnight. Possible JPY intervention. We may see that happen again. Okay, so we got filled on that other order. I'm okay with it. I'm okay with it. I don't know if that would have been a great trade for my live account, but it is working out. I'm liking the liquidity. Liquidity looks good today. Looks healthy. Looks healthier than it was, right? Because 2 days ago we were getting these slippery moves all over the place. This one, there's quite a bit of trade every step of the way. Now the question is, how far do they get? Well, if they do pull back again, I might add another contract. I think that because of the PCE was good and the JPY intervention, that my bias is to upside equities and treasuries. Action could be short-lived. Let's add in here. It's Friday. Flows die early. Okay. Don't think this is one that I want to hold all day. And like we're getting this movement, I think that the market is probably going to come to some sort of a negotiation and find a range before before we get into the Michigan numbers, right? So I thought, it's getting into allergy season, and I thought the rain today, maybe that will help. Not so sure. Not so sure. Hopefully it's all dry so that I can do the lawn tonight. It's like, I can do the lawn tonight, shower. Hopefully it won't be too bad, and I can work out tomorrow morning. Because if not, then tomorrow will be too many things to do tomorrow. Well, I'm kind of giving that Japanese yen that side eye. I don't trust them. I kind of think that at any moment Japanese yen intervention could come in and just go boom. I should keep my live, I don't know if I'm going to take a live trade today or not. I think that I'm going to be somewhat constrained until we get, until we have the Federal Reserve meeting, that is. But I think I better have the order window open and everything, just in case. CNN's Tapper, unlike Charlottesville, most campus demonstrations were peaceful and for Palestinian rights. No. What do you think of this Fed analysis, specifically the no November cut, since it's close to elections bit? Yeah, so the market is pricing that that the first cut is likely to be around the September timeline. I don't think that September is so close to the election that they can't do anything. There is definitely a thing where it's like you would really prefer to have all your ducks in a row before the election comes, so that there's no chance that anybody thinks that you're trying to sway things. That is definitely something that they do, whether they admit it or not. But there's this other side. There's some people think that the Federal Reserve wants to help Biden. And if they want to help Biden, they're going to try and slip that rate cut in there, whether they can or not, They're going to slip it in there if they can, let's say. Well, let's read this story. Since the March policy meeting, inflation has proved much more stubborn than initially anticipated. In turn, the prevailing narrative among Federal Reserve officials has been one of needing more confidence before lowering rates. As a result, the timing of the first rate cut continues to be pushed back. Markets are not fully priced for a cut until November, although given the close proximity of the U.S. election, it is unlikely the Fed would begin its easing cycle in November. I think that that's probably true. You probably wouldn't do it. Like, wait, when is the November meeting? Let's come and look at this. This is actually, I think might be picking up on something here that I missed. November. Okay, that's interesting. So wait, why would that be on a Thursday? That can't be right. It says, my calendar here says that the Fed meeting is November 7th, but that's a Thursday, not a Wednesday. Sixth through 7th. What the F? Wednesday? That can't be right. Dude, this is gonna bother me all day now. November. It says that the Federal Reserve press conference will be on a Thursday, November 7th, and then the election is, just after that. Will it be November 5th? Oh, okay. I see. So they're not gonna. Oh, okay. So they're not gonna have their Federal Reserve meeting on Tuesday, Wednesday, because it will be an election. So they're gonna push it to Wednesday, Thursday. So that, first of all, I think that first thing that they say there, I don't think that that's right. That the election will be over. The election will be over, so they could start in November. So that's, we just noticed, I think that's something relatively important to know. All right. It is unlikely the Fed would begin its easing cycle in November, or the September meeting for that matter. Alongside this, easing priced in for 2024 stands at 35 basis points. Well, I remember the last time around they did have, they did something in September and then they didn't want to do anything October, November. Who is this? Oh, this is a Reuters. Okay. All told, while the progress on inflation has stalled in recent months, the majority of policymakers remain asymmetrically tilted towards easing policy, meaning that the policy can remain unchanged for longer with a view to eventually reduce interest rates. However, the most notable comments came from the New York Fed President John Williams, an important voice on the committee, who cautioned that the Fed would hike if data called for it. This is interesting as it deviates somewhat from the party line, which has centered around the leave policy on hold for longer. Thus, the introduction of the subject of hikes, however conditional and unlikely, would probably elevate policy uncertainty going forward. The topic of hikes will be an area of focus from Chair Jerome Powell's post-decision press conference. Yeah, I disagree with that analysis of Fed's Williams. So he did say that. But he said a bunch of other things in that speech too. Within the context, I don't really think that particular statement is as significant as they are making it out to be in this particular article. He's also not the only one that said, well, listen, if the data says that we need to hike, then we're going to hike, of course. But right now, it really looks likely that we can hold rates here for a long time and that we will eventually reduce them because monetary policy does appear tight right now. And that's what they're all saying. There's this whole thing you gotta remember. This is a really interesting thing because part of this is about what does the Federal Reserve actually think and actually want to do, and then there's what we see, right, and how we think and how we interpret things. So, what we're doing here, or what the market does, is they hear one message on the news squawk, and they know that Fed comments have really moved the market strongly in the past. So we got to pay attention to those, and those can give us hints about what the Federal Reserve is thinking. And so every time that they hear something on the news squawk, they think it's a really big deal. When the reality is that they are not getting the full context, right? The full context is he's just giving a speech, and he's just, he's might not necessarily think that much of it. that particular speech was not some like, sometimes they know that people are listening. They're like, okay, this is where we're going to really have to come in and set the market. But that wasn't that speech, in my opinion. And I think when you look at the whole context of the speech, where he was talking and the other things that he said in the speech, to make this big deal that like, well, the Federal Reserve, they want to keep it easy, but Williams, he's not. So I don't think that is really an accurate reflection of what's going on. I think that what's really going on is the Federal Reserve believes that policy is tight. They expect the economy to slow down a little bit, and they're anticipating that they'll be able to reduce interest rates back to a neutral level soon. And they really want to do that because the high interest rates are killing people right now. They really are. So it needs to happen. And these people that are in support of the Democrat Party, they're going to be a little bit more prone to wanting to reduce the rates just because subconsciously they know that that's what would be best for them and their party. And that's what would be best for everybody, is if interest rates are able to come down. Of course, it's not good for everybody if they bring interest rates down and it creates more inflation. But I would hope that they don't do that, right? They're smart, that they're able to analyze things well enough that they can see if it's not ready, right? So I think, let me tell you, when it comes to the Federal Reserve meeting on Wednesday, that meeting is really going to be about is how does Chairman Powell interpret all of the news that we've gotten in the past week and a half? Because remember, let me pull up my calendar here. So there is a blackout period. So the 2 Fridays before the meeting. So the meeting's always on a Wednesday, except for in November, it's going to be on a Thursday. A meeting's always on a Wednesday. So then this is the Friday before. And then 2 Fridays before, which was last Friday, is a blackout period. So we haven't had any Fed comments over the past week. In the meantime, what has the market been doing in the past since, which date was it? The 19th. Since the 19th. Look at the market since the 19th. Okay? Some wild stuff. There was a really big move up in the treasuries that completely retraced. I don't remember what this one was on the 23rd. Was that Monday? No, that was Tuesday. I don't remember which news that was. I have to come back and look at my calendar. Oh, yes, it was the PMIs. That's right. There was the PMIs that looked really good. And then we got the GDP number that didn't look good. And then we got the PCE number that did look good. So we're kind of getting a little bit of, I would say, contradicting data, I think. But, these are all pieces of data where there's actually a lot of nuance that you can read into it, right? So does the chair believe that the data that we got there is significant enough for them to kind of shift their perspective or their outlook? I'm going to bet that it doesn't. I think that he is going to stress that we need to watch the data and we need to be cautious, and we will need to see inflation continuing to come down in order for us to reduce rates. But I don't think that what we got on it in and of itself, because of the PCE, if the PCE came out and was like spot 5 today, then that would be like, okay. But without that, they can kind of say that the numbers that we got from the PMIs are, kind of more seasonal revisions and this sort of stuff. Right. And so then it turns into, again, what is the next non-farms, which is going to be next Friday, right? Now, the Federal Reserve usually gets some insight into the non-farms when it's that close. Like, we don't have it confirmed, but it is widely rumored that they get it. Okay. when it's that close. And then the PMI, or sorry, then CPI. And I'm kind of thinking may not be enough, so maybe June. Maybe by June, then we would really have a definitive answer as to whether inflation is a big enough problem to delay rate cuts past September. So that's kind of what I think. That's what I see going here. For the Federal Reserve meeting next week, and of course, so always pay attention to that morning action, the 2 days, like the Monday, Tuesday. If you start getting trends that Monday, Tuesday, the market might think it knows something. I think that probably what we're going to see is a little bit of hedging in the meeting and then relief after the meeting, similar to what we've had the last two meetings. And that's kind of like my game plan for the Federal Reserve meeting. So, yeah. I would say, by the way, going back to Fed's Williams, he is one of the more conservative members. But that's largely because there's so many Biden that Biden put two people in there, and then like that the Federal Reserve Board is actually quite liberal at the moment, right? Because they ousted 2 or 3 major conservatives and replaced them with liberals. I think, though, if that hadn't have happened, I think that we'd probably still be in the same. I think the only one, if you can oust the Fed president, then you could maybe get a major change in Fed policy. But I do think that that's an important thing to kind of keep in mind when you're hearing them talk, right? Like, especially Goolsbee, okay? Just remember, Goolsbee is hyper liberal and really, really wants monetary policy to be easy. Have you ever received an email at work with a project that had a deadline 1 month ago? No. Actually, you know what? I would think that in the software development industry, that deadlines would be a more significant thing than it has been in my career. In my career, there is a fire and we're putting everything that we have into it right now, or you just do your work and things take as long as they take, because it's really, really hard to predict, And like, we try to predict and see how good we are at it, but we all kind of know that we suck at it. Okay, well, that last kind of semi-profit taking, they came through both of them. Cool. So that puts our cost basis and our break-even point way down there. I don't think that my cost basis is actually at 16, but whatever. I think that was the last contract that I added, and we took these ones off, and so it goes to 16. But that's looking good. Now, can we get above 21.5 though? So you can see this value area right here. They've been, that was basically where they stopped last push up. So there may be some people trading against it. And I'm not necessarily seeing at the moment any really strong meta order, at least not in the treasuries. But what I do see is the Japanese yen kind of moving up a little bit more there. So if intervention is going to come through, they may just blast through this, right? What does a cost basis mean? Okay, so what I mean by cost basis is if I buy, and I buy with 2 contracts, and one contract I buy at 16, and one contract I buy at 17, then what is actually my cost basis? Which is to say, what is the net average price per contract that I paid? It's going to be 16.5, right? So that's essentially what I'm saying here. Is I bought multiple contracts at different prices. Let's see if we'll pull it over here and look at where we did it at. Take that filter off. So it says my average price was at 16, but it kind of does some weird stuff about how it does that. Let's see here. Buy. 4 buys. So there was 18.5 and 19.5. So that had me at 19. Took profits on one of them. Then they came back to 18.5. So that would put me at 18.5. And then I got one at 16. So I think that what happens is because I took one contract off, it kind of does a first in, first out sort of a thing. But if I were to really, really say, you know, like I bought them all at the same time or something, then my cost basis would actually be something like 17. In fact, I have to go back and look at the video, but I think that when that second contract was filled, that you probably saw my cost basis decrease, because it's basically saying, oh, okay, the contract that you bought at 18.5, you have now taken off. And so now the only contract remaining is the one that you bought at the lowest point, which is at 16. Captain Prices, I'm just going to go play Animal Crossing. That's a dangerous game, Captain Price. I don't know if you want to get yourself into that. Dangerous game. The thing that's dangerous about Animal Crossing is that it's seemingly casual. I've never played it, but it seems like a casual game. Like, oh, you know, I can come in and just maybe play it for 10 minutes a day and still, you know, still take care of my kids. It will just suck you in. It'll just suck you in. Okay. Now, it's not as bad. It's not the worst thing, right? Like the real heroine of the gaming world that you need to be worried about as a day trader is EVE Online. Okay, don't get into EVE Online, guys. You'll love it. I would love it. I'm not gonna play it. I know what would happen. Play a good family game like Helldivers 2. EVE Online, EVE Online. That's the one where like you have a ship and you can go around and mine minerals and stuff and create corporations, and like there's a real economy in there, and you can like trade resources and a lot of the game. Yeah, see, Kyle's like, yes, that is the crack. It is. Be careful. Friends, friends don't let their trader friends play EVE Online. If you got nothing else going on in your life and you got the time, then go ahead and do it. But if you're a trader, it's just gonna, I'm telling you, it's gonna suck you in. If you're the kind of person that on a regular basis pulls up Excel, then EVE Online could be a problem. Okay, no Warcraft 3. Oh, okay. So like, no, you know what? So Star Citizen. So the last game that I really got into was PlanetSide 2. Oh, PlanetSide 2 was a fun game. And I enjoyed playing with the people. I had some friends. We played super regularly. I absolutely loved it. That kind of died down. The outfit that I was in kind of went downhill, and I left, and we just kind of played with my smaller group of friends, and then they started screwing the game up. One of the things that was kind of towards the end there, though, was Star Citizen. That basically some of my friends were really excited for Star Citizen, and you know, because that was or is rather supposed to be kind of like a massive multiplayer game too, they kind of thought, oh, we're gonna move over to Star Citizen. Of course, it didn't happen. That was like 10 years ago, but has it been that long? It's been a long time. It's been a long time, man. The Seth not playing video games as regular era has gone on way longer than I've realized. It's still really wild to me to think that it's 2024. We're already 4 years past the pandemic. It's like, oh my gosh, wow, really? I feel like that it was just barely happened and that was just yesterday. And we're still recovering from it, you know? Now I am kind of interested in the real-time strategy games. Not that I've been playing them regularly, but I really love watching StarCraft Brood War. Like this TV channel in Korea called Africa TV. They run a StarCraft tournament, and they don't monetarily support the English cast of it anymore, but they kind of still let them do their thing, and the English guys, you know, have a Patreon set up, and so they make their living off of the Patreon. And I just love watching those casts. The games in Brood War are still like amazing. Every game is different. There's always something wild to get excited about. If you ever played Brood War, you'll just absolutely love it. It's so much fun to watch. And there's like 3 or 4 major real-time strategy games set to come out in the next 2 years. So there is possibly a real-time strategy renaissance on the horizon. I'm not actually sure if that's going to happen. The 2 games that I've seen so far, I was kind of underwhelmed with. There's another one that we're going to find out about in June, when there's like the Steam Game Jam in June, and then we'll see this other one that might have a completely different look, and we'll see if I'm into it or not. But I prefer kind of the Brood War way of things, which is that there's like a lot of micro and there's a lot of stuff going on. And that's the thing that I kind of find interesting and cool. Whereas Warcraft 3, because that's why I'm going into this, is because Andre is mentioning Warcraft 3. Warcraft 3 was a little bit more like smaller unit groups, and you have a hero, and I'm just not as into that one. I'm also just not as into MOBAs. I don't know. I've tried getting into them. I'm like, League is a game that gets played a lot. If I want to get into a game that's... Because one of my problems is, like, I'm into a game and then it dies, and I'm like, oh, I wish that my game was the popular game. Why don't I just go and play the popular game so that I don't have to worry about that anymore? Well, that's League of Legends, isn't it? Didn't hold my interest for whatever reason. Although I'm sure a lot of that has to do with that babies for the last 4 years have sucked my life in. Well, we have developed a very strong liquidity hole at 20, by the way. I'm gonna keep an eye out because I still think we could see something from the Japanese yen, but it does look like that the flows have subsided for now. I'm pretty happy with this sim trade and how that all worked out. Maybe you know what? I have had these go wrong for sure. I think overall net for the past year of doing this or so, that I've done pretty well with them. And actually, let's go and try and do some statistics. Let's go and look. MOBAs were not so successful for me neither, but Civilization was lovely at some point. I've never tried Civilization. One of the things that really irks me in the real-time strategy world is that people think that what is interesting about a real-time strategy game is like all of these strategic decisions that you make. Am I going to go down this tech tree or this tech tree? And you know, I can trick them into thinking that I'm going this way, and I actually go this way, and all of those sorts of things. And I don't think that that's the case. Those elements, if you took those elements and you just made a game with just those elements, you would have a turn-based strategy game. Okay, turn-based strategy game isn't bad, but it's not amazing. I really think that the thing that makes a real-time strategy game interesting and unique is the micro elements, and the fact that there are so many things that you have to do and keep track of that nobody can possibly do them all. And so it all kind of comes down into your own unique expression of which things you decide to focus on. And you can be successful focusing on different things. And that's what I find interesting, right? I think that the best multiplayer games are the ones where there is a really wide variety of ways that people play it and they can still be competitive. It's not just like, oh, there's different classes and so you can all play, you know, you can play different classes or something like that. I'm not saying that. Like, if there's no classes in there and you're on an even playing field against other people, there's going to be 3, 4, 5 different types of players that are focusing on different strengths. And Brood War really has that. Really has a lot of skill expression in that game. There's a lot of skill expression in trading, right? What was I gonna do? I was pulling up Jigsaw here. Dashboard, and I am going to go back to 2023. Actually, maybe I should go back as far as 2022. September 2022. Let's just try that. 01 to now. Apply. Gonna take it a while, and I only want my ZN trades. Only ZN. What are we gonna get? Okay, so in that time period, it says that after, wow, are commissions that high? Okay, so there was a period that last year where I was taking a couple of those sorts of trades where I did, you know, kind of went back and forth, but as of late, they've been going pretty good. And where's my stats? Show me stats. What's the largest loser and largest winner? Okay, very good. My largest loser was 2,000. That's a little bit higher than I would like. Largest winner was 3,500. Okay, my average loser is larger than my average winner. So what's happening is I'm taking on risk with multiple contracts, and when I do lose, I lose big, but it's not too bad. So there's a little bit of room for improvement in there, but having a 58% win rate, that's great. And what about my MAE and MFE? Oh, wow. Yeah, that's great. My MFE is a lot more than my MAE. So that kind of suggests to me that like my position management strategy could use a lot of work. I'm not getting the most. My losers could be cut shorter. My winners could possibly, you know, get better exits. probably had some that were like big winners and then came all the way back on me, right? But in general, when I take those trades, it's going further in my favor than it is against me, and that's very, very good. That's not, if I were to look at my live trades, that would not be the case. So maybe I am doing well enough with this that I could start to mess around with the same thing in the micros. I love journalytics, even though you're not a fan of Jigsaw. Mm-hmm. See, if I come back and I do the live trades, it's not going to be the same. It's not going to be anywhere even close. Let's see. It's probably going to be like a net loss. Yeah. Oh my gosh, it was so good though. I tell you what, guys, that's so frustrating, right? To look back on. I mean, I knew that was the case, but it just kind of hurts to be reminded of it, that like at the beginning of the year I took this big hit. that hurt. So if I show my stats on this, my win rate is not very good, huh? Yeah, well, 40% is okay, I guess. But what I really am interested in here was the MAE MFE. Okay, so I am getting more favorable ticks than adverse ticks, but my adverse ticks is way too high. Okay, but what that actually says to me is that the volatility of the market is too high for the risk parameters that I want to hold. Like, I'm having a trade where like I make or lose 10 ticks, 10 to 15 ticks, right? And what it's telling me is it's really common for it to go 15 ticks against you. So really you need to be more like, 20 ticks. Make or lose 20 ticks. If I could come in, maybe I should start coming in and saying, okay, equal risk reward, but my risk reward is 20 ticks instead of 10. That's what I think that's telling me there. Let's come back and do some more analysis on this, shall we? NYR. And I'll do a 5-minute chart. I'm going to change these. I might need to come in and change. Yes, I think I do. Okay. I'm going to do something funky here that I haven't messed with in a while. But if you're new to NinjaTrader, you might want to pay attention here. Tools, trading hours. Okay, so here's my trading hours. I'm going to take this regular trading hours and I am going to copy it. And I'm going to call this one STH, the Seth trading hours. Okay, so this time is all in Central. Oh, can I change it to just Mountain Time? What will that do? Oh, no, I don't want to do that. Okay. So we're here from 6:30 to 9, but it's actually 7:20 to 10. Okay, so I'm going to edit all of these. Say that the end time is 10 a.m. Oops. a.m. 10 a.m. Since I could end up using this a lot more, well, I don't know if I need to change the holidays yet, but let's just start with that. Mountain time sounds so like an alchemist. That's funny. Okay. Trading hours. Interest rate STH. Okay. Okay, so now you're only seeing the bars where, you know, like we're active. Have you heard about yes, and I have no interest in that. That's nonsense. I hear that's a much bigger, like that's a much bigger scam in the UK compared to the US. 365 days to load. Okay. Wait, is that actually... It is. I thought the chart would be a lot bigger than that, but that's okay. Okay, so now that we only have the bars where we typically trade, now let's go and add our range histogram on it. So I have a free version and a paid version. I'm going to put the paid version on it because there's a couple of little extra features in the paid version that are useful to us. One of them is this use area. So, I won't limit by day of week though. Okay. So what this is doing is it's generating a range histogram. It's saying these are the number of bars that, okay, the number of bars that are 5 ticks. Most 5-minute bars are in the 5-tick range. Okay. But what it's telling me is that the bars in the colored area, if you took all of the bars in the colored area and the profits from those bars, that would be equal to the profits from these outlier bars. Okay. So interestingly enough, there's like a big old cut right there. I think if I, oh, isn't there text? I thought that there's text on this, but oh, whatever. Because you know, you want to see the actual numbers, right? Like how many samples there are, because it's doing a log. If I change this to well, so first of all, I'll show you the difference with the area, right? If I take area off, that blue area will be a little bit larger potentially. Oh, okay, that's interesting. Okay, but if I take off the log, you'll see how yeah, right. The scale is wild. That it actually is like there is just a lot more within the 10-tick area than there are within the 20-tick area. That is a fat-tailed distribution, isn't it? It's a really fat-tailed distribution. But it does look like, okay, but this is for 5-minute bars. I actually prefer to be in a little bit longer than that. So let's change it to 30-minute bars. Let's change it to 30-minute bars. And now we see that most 30-minute bars are 20 ticks, at least in the last year. And I'm trying to hold a risk reward of 10. So that puts me much smaller time frame than I thought. So that's maybe something that I have to consider a little bit. But I think that my trading might do a little bit better. Okay, now what is with that coloring there? That I can't explain that. why the little tip of it is blue. Oh man, that's so weird. I'm gonna have to investigate that. Why is it doing that? Wait, if I refresh, is it? How come when I reload NinjaScript, it's like almost instant? That's a little bothersome, to be honest with you. This distribution is also really messy. I mean, there is a clear, like, line here. With a lot of outliers. I find this one right here, where they take profits one tick short of 30, a little interesting. Now, a lot of those bars are going to be after news. I would like to make something that would allow me to like discard bars around news events. Like, let's say the 5 minutes after a news event, or maybe 10 minutes after a news event, right? And then do the stats on that. I think that I would maybe get some cleaner stats. But this does tell me that some of the risk levels that I've been trying to hold on micros aren't very good. Are too tight for the conditions over the last year. It was okay when we started, but they've been a lot more volatile in the last year. So what's going on there? So the reason we got to ask that is, okay, so if I'm going to take 2 or 3 contracts in the micros, right? And I'm potentially risking 20 on each of them. So let's just round that out to an even 50. So what would we actually want to start with? I think I would want to start with 2,500. Okay. Well, that's a little bit more than I have in the account right now, but we can put more into the account and then maybe we can start doing that. In the meantime, though, I should probably start looking a little bit more about how I might deal with the smaller contracts in the micros. There is a little bit of wiggle that we might be able to take advantage of over here. Overall, I'd say the market pretty sideways since that liquidity hole up at, what was it, 21? And at the top of the hour, we'll get the University of Michigan sentiment. Okay, well, I haven't done that exercise for a long time and not on the micro treasuries, so I think that was useful. You taking a stab at a long? They are getting a little bit of long momentum on the cumulative delta, and especially in the 30-year. A little bit of steepening. I just heard a thing on the news squawk about Hamas saying we are open to a ceasefire. Yeah, okay. Everything that they've done with it so far suggests to me that they're not. Question though is, can they get above the value area still? Seems to me that like the noise isn't interested above 21. And if all we're getting right now is noise, then I don't know if I could really be going for a trade to get above 21. After the consumer sentiment, that might be different. Guess I didn't really think about this one, that I will have that, you know, to really get much more out of this, that I would want to hold on until consumer sentiment. So maybe it does make sense to take profits at 2021. We're getting a good meta order coming through here, though, so let's just kind of hold it. Maybe if we do get a clip higher, I could maybe justify taking the risk on the consumer sentiment number. Kind of what are the numbers we're looking for here? Sentiment final 77.9 versus a previous reading of 77.9. I think it might actually be worse than anticipated. So maybe a 75 or something like that. 5-year inflation, they're looking for 3, and 1-year inflation, they're looking for 3.1. I think those numbers are reasonable and that we could probably come in line. So if we came in line with the inflation numbers and the headline sentiment number was a little bit weaker than normal, then that could maybe help treasuries. But I don't know, is that like, so I'm kind of guesstimating here, right? The chances of that happening are low enough. I don't know if I really want to take a big gamble on it. But if I already have, so I'll hold it for a few more minutes. If I already have a big win on top of it, and I don't think that news is going to be that significant, then it's not that big of a risk. Okay. But if we're still here at 20 when we're getting to that news, then probably I take it off. Wow, what? Escape from Tarkov is charging $250 for a player versus environment mode? What the F? That sounds so stupid. That sounds like I would just stop playing that game right then and there. Hmm. Jim Iurio, I've heard people saying that the protests are funded. Is there any real proof of that or just speculation? I don't think that there's any real proof of that, but there is a substantial reason to speculate that it could be. Because, well, there's all these things about like all the tents look the same and stuff like that. But let me tell you something. The left is really good at organizing protests, and these are always organized. Like there is always an organization with some degree of money involved. So like grassroots in a live protest is not the same thing as like grassroots online. Grassroots online is like you made the video and you put it out there and people just happen to like and watch it and yada yada yada, right? But these things never happen without there being some sort of organization. Any idea where I can get free NinjaTrader footprint chart indicator? So there are definitely some on Futures.io. I don't have any of them on me. That's not free though. They're definitely out there. What I would do is I would ask in the Discord, you know, if anybody has a NinjaTrader footprint chart beyond the built-in volumetric bars. Found one, but it's not activating. I don't know. I have one that like I broke. I haven't tried messing with that in a long time. There was one where I was like, oh, I really don't like the way this code is written. I'm going to clean it up. And so I went and I cleaned it up and then I didn't finish. And so I think it still doesn't work. But like, I just don't really use that feature. So it's like not a thing. So I could go and try and fix it, but I don't know. For me, because I use Jigsaw, you know, Jigsaw has really, really good footprint charts, so don't really have a very strong incentive to go and mess with that. So I guess the reason why I might want to mess with it is if we're going to do back testing on it, right? So 23 is stop out zone. That's interesting. Gonna clear above us so that I can see that a little bit more easily. Since the only stuff above us is kind of that tell from the news. It's been more than 45 minutes, so I think that liquidity above us should probably just be normal liquidity. There's just more info in a footprint than a candle bar? Yes. Unfortunately, more information doesn't necessarily correlate to more edge for us, though, right? There is definitely some information in, watching the orders. I think that the real information that you can glean from that is much better seen from looking at cumulative delta and watching it as it trades on the DOM. And I'm not convinced that the footprint actually provides more. I think that what I think happened with footprint was market delta, the guys that made this pseudo chart aren't around anymore, I believe. They made their footprint charts and they said, hey, here's a really cool way of organizing this information. And then they put it up there and they said, well, here's a pattern that it seems like happens. And so they created all of these ideas about how to trade these patterns. And it's just coming up with a new style of chart and then doing technical analysis on it. And there's absolutely no real study on its efficacy. They just, then you turn around and you sell it. So I'm always a little cagey around the footprint chart thing, because some of the quote unquote pattern signals that people look for in footprint charts, I know are nonsense. Like some of them I had one thing where there was a unfinished auction, and I created a back test that looked at the unfinished auctions, and it didn't work. It was nonsense. Market delta guy tried to sell the source code to recoup some cash. I don't know what happened over there. It kind of seems weird to me that they would go kaput like that, but I guess they just weren't competitive enough compared to other platforms when everybody else got footprint charts too. Maybe. They were still around when I first started, though. And that's the weird thing that you got to realize, though, is that you can make just about any kind of weird way of analyzing the markets and find people that will be willing to buy it. It doesn't necessarily mean that there's an edge in it. There's certainly things that I've created where I'm like, okay, here's an interesting way of looking at data. Maybe you can take it and do something with it. But I don't claim that there's an edge in it, right? I think that people kind of assume, though, that if it's being put out there, it's because they know that it works or something, and it's more like that. like the reality is that most of what goes on at the time frames that we're trading is random, and it's very, very difficult for a regular person to come in and find like really consistent success in trading that without taking on risks that you probably shouldn't, right? And so yeah, there's a whole ecosystem around trying to get better, but it's also noise too. And this is not to say that the ecosystem is bad. Oh, we're selling things that people really shouldn't be buying or anything like that. No. I mean, as long as you're selling the indicator, service, whatever that does what it says, that's totally fine. And it's good to have an ecosystem, because honestly, if you didn't have the ecosystem, then there might not be anything there, and then that would be really bad for the markets, right? So, but what it does mean is that you as an individual have to be a lot more discerning about, what you're getting. So I have some things that are kind of like, you can mess around with this. The primary thing with my like order flow indicators in my paid suite is these allow you to write algos that are looking at order flow stuff. That's really what's special about it. So, what is the potential pattern or whatever that you're going to find that you can do with it? I don't know. But what I do know is that those indicators would allow you to make it. So, and then the other things that I have with it are things that we can objectively prove are useful, like the dollar. How are you trading without knowing what the value of the currency that you're trading in is doing, right? This sort of a thing. Oh, they were sued by Linsoft. Oh, okay. Yep, we have Michigan sentiment in about 10 minutes. Last non-farms feels like yesterday. April went through really quickly for some reason, didn't it? We've kind of gone through all of the relatively major milestones, and I kind of think that the Federal Reserve meeting next Wednesday is probably the start of a slightly different era in markets in the world. We'll see where it goes. Well, we had a good run. We came right up to the stop out zone, so I think that I should take this last contract off. You see right here on my cost basis indicator, one tick through it and then they stopped. So it's not always that precise, but it seems awfully prescient when it works. I don't know what to say. If there's a real edge in it or not. You know what I think actually might be the case? I think that the cost basis is showing us what we think it is. But it's just that there is so much noise in the market, and the fat-tailed nature of things and all of that sort of a thing, that my back tests are just not going to be able to pull it out. In other words, I think that it could be possible to prove that there is a real statistical aberration in the markets with that indicator, but that you might not necessarily just be able to make a simple trading strategy off of it. That's kind of what I'm thinking, because the amount of time that the market comes right to that line is just scary. Like, I've seen all sorts of other lines. Things like, I think the one that always sticks out in my hand is pivots, floor pivots. Well, floor traders, they traded off of that. I don't think that there's really a whole lot to them anymore. And usually they go through that line and it doesn't really predict anything. But with this cost basis, like the amount of times that it will come right to that line and it bounces is scary. This is wild to me that my back testing was inconclusive, because it really seems like it shouldn't be. But like I said, I think that the reason that may be is just because there is so much noise on an intraday basis. That like market makers are doing things at these areas to rebalance their portfolios and so forth, and that this does show that, but there's still market orders and the and fat-tailed markets and everything, and so that kind of makes the trading strategy, kind of messes the trading strategy up a little bit. perhaps maybe I need to think about it from a, so there's got to be a way to do it. It's just going to have to be like a little bit more creative than what I've tried so far. It's got to be more creative than just, oh, if it comes to this line, take a short on it bouncing off of it, yada, yada, yada. Right? Maybe part of that is filtering it better. But again, like, I need to be able to filter out news. One thing that might be interesting, though, is there more liquidity at those locations? I don't know about the stop out zone, but at the, we say the cost basis, is it perhaps easier to pull a tick out there? Does your indicator calculate cost basis based on total orders or only? Well, okay, so here's how you do it. Is what you do is you take multiple passes. And on one pass, you say, okay, I'm going to assume that every buy order that gets filled is all the same market maker. Every buy order that gets filled is the same market maker, adding inventory. And every sell order that gets filled is that same market maker taking profits on the inventory that he holds. Okay. So then, with that assumption, what is his average position? And, he's taking profits, right? So how far would it need to go before there's no way that he's possibly making money, right? Because you could have a market that moves up, but a market maker making a market short still makes money potentially, right? Okay, then we do another pass and we make the assumption the other direction. We assume that every sell limit order that gets filled is a market maker adding inventory, and every buy order that gets filled is the market maker taking profits. Right? And that's where you get the two lines from. So those are like really crazy assumptions, right? Obviously, that's not what happens. There's multiple market makers. There's all of these different sort of things, right? But what it does is it gives you like a best and worst case scenario, right? Like that is, the best case about where the buyer cost basis could be, right? And so because of that, those price levels end up being useful. Yep, exactly. Yeah, every ask order is a market maker adding to the inventory, and every bid order filled is taking profits, right? You have filters. I don't remember. I don't think I do. I tell you what, there's a lot of data series in this, right? Because there's the cost basis long and short and the stop outs, but there's also how much profit they've made, how much inventory they have right now. So you can actually show these too. These other data series, they're kind of interesting. These data series are used to calculate these four, and I just make them available to you because I can. My fuzzy recollection on filters, is that I tried filter and it didn't really change anything. With that thing that came a couple of years ago or something, that you can have data of how big is every bid order on the, well, yeah, right, market by order data. Yeah. So the stop orders I think would be useful. I think that the biggest enhancement that I could make is that if I had market by order data, and I could detect market orders converting to stops, then I could come in and I could say every stop order that I see is that market maker taking losses and reducing their inventory. And that might give me a more accurate number, because one of the things that I will find is that after this news, for instance, the levels might not be as good because everybody's already rebalanced essentially. So if you can see the stops, then you can kind of see them rebalancing. And yep, totally, absolutely what I would do if I had the data. I don't know if the filtering would necessarily help though. To be honest with you, the only thing I've ever really found that was if I filter to a certain size of orders, the only thing that I've really ever found with that is, when you get those big block orders, that tends to make the market congested. Okay, here comes the news. Okay, so the number is under expectation, but only slightly, 77.2. Inflation, 5-year is in line, 1 year is 3.2 versus 3.1. So that is a lot closer to in line than I thought it could be. So I don't know what the market will do with that. I'm not really seeing any oh, okay, I want to take a trade off of based on that. There's a little bit of movement, but not a lot. So I'm concerned that this market could die out very quickly here. Anyways, on the cost basis, so back to the cost basis thing, another way of thinking of it is okay, the market makers might have certain lines and places where they're making or losing money and where they're more or less likely to do certain things. But it doesn't matter if a large meta order comes in and just creates an uptrend, right? And that happens enough and you lose enough on an intraday basis from doing that probably prevents me from being able to see the real statistical aberration of this cost basis through a trading strategy. But the other issue is that there can be up to 10% difference between live data and tick replay constructed data, and that could change the price levels enough to also mess the algorithm up. So it may also just be a case of, once I get my butt in gear and program some of these things out to run on the data that I've been caching, that I'll be able to see something better. So let's see. We'll see. By the way, I am still collecting that, right? Data pipe, yeah, it's there. 10% difference in data is a lot. Well, it can be. That, so the kind of thing, so just as an example, okay, your cumulative delta could be off by as much as 10%, maybe even as much as 20% if it's a market with a really wide bid ask and you don't have a very good algorithm to categorize the data. That's why I created a special version of cumulative delta just for stocks, so that you could reduce that error. But if I'm getting a strong autocorrelation in cumulative delta up, right, is that 10% going to change that chart? No, it's not, right? So where that 10% difference can screw you up, though, is if you say, well, I'm going to take a trade if I get a move that's over 10,000 contracts. Let's just say that. Let's just say that in the past 5 minutes that I've seen 10,000 contract change in cumulative delta. Okay. Well, the point at which I go over 10,000 might be 1 to 5 bars different. And then you're ending up getting in a completely different price, and it completely changes the thing, right? Now, that's maybe not necessarily a problem in as much as that what it's doing when it's backtesting and what it's doing when it's live are the same, right? That's why tick replay on these sorts of indicators doesn't seem to work very well to me. Like if you run a strategy and you do all of your kind of like machine learning stuff to kind of sort out certain parameters that you don't necessarily know what they are and all of that sort of stuff. And then you run it live, it's not going to be the same thing because it's slightly different. So the only solution is cache it so that when your back test is exactly the same as the live data that you're doing. Right? Then if it doesn't work, then you know that it's just because you're curve fitting. But at the very least, when you run your back test the day after, the back test should still take the same trades that it tried to take when it was live. It didn't when I was testing that. So that could also be a factor as to why we've had a hard time finding a strategy, an automated strategy based on the cost basis indicator, even though it seems like they come up to that line so often. I mean, come on. Come on. How is that just a coincidence? I don't know, man. Obviously, we need to be able to have empirical evidence to say that there's really something to it. But when I just watch this, I just have a really hard time understanding how it can do that and it be random, you know? Whatever. Could probably do anything now, but I think that the market's probably going to die down a lot. Probably going to die down a lot. Let's check out here. See. What have you tested only on the? Well, I've done. When I did that, I was only doing my trading hours actually. Yeah, it just kind of reminds me, what are all of the things that we've got on our list? Let me open up another big shell. Well, so we have some ideas about stream programming ideas, countdown timer, candlestick plus plus, etc., etc. I updated the website So if you got some time, you go and look at it and point out all of the funny little errors on it. I'm sure that there's a ton. But I did update it, so actually I'll show you. So now you come over to the main website and you got free downloads, and by now free downloads takes you to this page where you got them all listed now. So you got the elite indicator suite, the free indicator suite. I put the multi-period candles on there, the sounds in its own little zip file, and the volume profile levels is the data, at least the latest one. And I also added a column so you can see when I last updated them and a link for documentation. Of course, I only have documentation for the elite and free suites so far. And then below that is the stuff that you had before about how to install it and all of that sort of a thing. And then the page to purchase it. So you can see the free indicator suite documentation. Got all of them documented. I don't have pictures, so maybe someday I'll do some pictures. Free indicator pictures. It does kind of look to me like the look of the website has kind of suffered a little bit, and maybe I need to have a project to change the theme. I'll add that in there. Change the look, possibly. Okay, but what we really care about is here we got our momentum things. I want to write these scripts. Ah, yes, then it's back to the transcription robot, avoid news algo. Analyze cached order flow data in Python. That's the big one. That's the one that I really want to do, but there's all these other things I feel like I got to do first, and I'm super slow. This should be done this weekend. Maybe I can write this. This I actually already kind of wrote. This I just need like a free day to do. Maybe today will be a quieter day. Maybe this weekend will be a quieter weekend and I can focus on that sort of stuff. So many things and not enough attention to do it. Oh. They're talking about the Japanese yen in Discord. The way that the yen has been trading is really... It's you don't hear anybody talk about it, but I think it's one of the biggest stories in this market, that the Japanese yen just keeps going down day by day, slowly, slowly, slowly. And the yen has come, the central bank has come in and tried to do some things to, you know, cause it to jump back up higher and everything. And like, they're all very short-lived. So they just seem to be losing that battle. And I actually, you know, some of the comments I'm seeing kind of suggest that they're like consigning themselves to that they lost this battle. Like, oh, okay, yeah, maybe we can't hold 155. Let's do 160 instead, right? Like they're retreating. That's a big deal. That's a big deal to a lot of things. Also, doesn't sound to me like the Japanese are very happy with the current prime minister. A little bit more liberal of a guy, and he hasn't been doing too well. How is that a big deal for global markets? Exactly. Well, because the Japanese are the biggest buyers of treasuries. So if the yen continues to fall, that right now they say, we don't think it's contributing to inflation. But there's a certain point at which that currency falling too much is inflationary, and they have to start to become aggressive, right? And then that could potentially lead to tighter monetary policy over here. Right? Like, if you continue to see the yen fall, that starts to pull all of us into the inflation is persistent, interest rates aren't coming back down, what do we do sort of scenario. I would hope that if the Federal Reserve cuts interest rates, that kind of turns things around for the Japanese yen and they're not as much under pressure anymore. But if their efforts are useless, doesn't that mean that the dollar is stronger than what the Bank of Japan? It is. But I think it's that the yen is weaker than what the Bank of Japan anticipated. Because I'm not honestly at this time. Well, let's come back here to charts. Where's my dollar? Just 6J. Okay. So when you look at the dollar, okay. Well, they took a jump up here after that CPI news. Okay, but overall, I wouldn't say that the dollar's doing anything too crazy. But look at the yen. It's just down, down, down. So the other currencies like the euro and so forth, they aren't reacting. It's just they're selling the yen like crazy. It's crazy. The Bank of Japan interventions could only strengthen the dollar. Well, I mean, when they intervene, what they're doing is they're selling dollars for yen. So presumably, if the Bank of Japan is successful, what we should see is the Japanese yen rise and the dollar fall. And the dollar at 105 is quite strong, by the way. It's kind of one of those funny things to hear people talk about on social media that, like, you know, because they're always concerned about the weak dollar and yeah, but like the dollar is really strong right now. And you don't really get to like concerning levels on the dollar until you're like in the 70, 80 range, right? So you have a lot of room there. Obviously, inflation's not good for everyday people though. And like I said, the big thing that I think you really want to consider and that nobody thinks about, because people don't think about the economy in this way, is think about it in flows. You have flows going into and out of all of these different sectors of the economy. And where is the money shifting to? Over the past 10, 20 years, the lion's share of that money has been dumped into tech companies. And now it's kind of come out of tech companies. And where is it going? And as far as I can tell, one of the biggest places that it's going is into anything that is a government contractor of any kind. So defense companies, medical companies, because, you know, they're going to be getting money through Medicare and Medicaid and all of that sort of stuff. And so those are the areas where all of the money is going to. And the government wants to siphon even more money out of like the markets so that they can spend more money on their buddies, right? This is why I hate, there's some economists out there that like they're good economists and they know what they're talking about and everything, but like everything they ever do is basically about how can the government get more money from taxes. It's like, as long as we can justify that the economy can handle it and it won't negatively affect the economy, we should try and squeeze them for every little bit that we can. I'm like, why is that your default approach to everything? That, oh yeah, well, we can change this tax law and make more money here, and we can change this tax law and make more money here. You're never actually asking, like, what is the optimal distribution of capital within the society? Which sectors do we actually want to invest in? And is our tax policy actually getting that money to those locations or not? You know? And that's what's going on. That's why, like, all of this data is confusing and everything. Is you've got, you know, there's these numbers that they know that the market cares about and everything. And so now we're all optimizing everything for those variables. And once a metric like that becomes a target, it becomes a useless goal at that point, right? And that's how you get all this stuff where it's like all of the economic data seems to be okay, but like everybody's still really unhappy. It's because those numbers don't really reflect the reality on the ground anymore, because they're only designed to make those metrics look good. I have another story. Some analysts saying tightening is not necessarily cooling the economy. This has an income effect on households and also gives a boost to treasuries, so to speak. Okay, so this is kind of a weird subject that I don't think that we have a lot of data on, but there are some people suggesting that the interest rates are not as, let's say, harmful to the economy as everybody thinks. The thing that is definitely true is that some people benefit from interest rates being high, and some people benefit from interest rates being low. There are some people that kind of are able to benefit either way. There are some people that are able to benefit either way, like investment banks, right? When interest rates are low, investment banks make a ton of money because it creates a lot of activity. And when interest rates are high, they make a lot of money because they make money off of interest rates, right? I would avoid being somebody that hurts regardless of whether interest rates are high or low, right? You want to be able to take advantage of at least one of those sides, right? Okay, so there are sectors of the economy and businesses and so forth that benefit from higher interest rates, have been hurting for a really, really long time, and are doing really, really well now because for the first time in like 15 years, interest rates are high. Okay, so that could be creating some economic data or some economic growth of some sort. But like, how do you aggregate all of that stuff? All of the people that are hurting from the interest rates and all of the people that are being helped from the interest rates, and like what actually is the net? And I can click that link, but I've read many stories of what you're talking about, Kyle. So I definitely know what you're referring to, right? I haven't seen anybody actually go through and say, you know, okay, but actually on net, it is a tight economy and we're moving down. I mean, I think that the metrics that we're actually getting out of the market, like the jobs numbers and the PMIs and all of this sort of stuff, do suggest that the higher interest rates are cooling off the economy, although very, very slowly. So now there's another side of this, which is that raising interest rates kind of doesn't necessarily help inflation in quite the way that we think it does. So like, now this one is a real conundrum. Raising interest rates reduces economic activity and can therefore, you know, kind of stop inflation in its tracks because of the decrease in economic activity. But the actual act of raising the interest rates increases cost for many people, including particularly like landlords and people selling houses and so forth. And so here you've seen this thing where, like, yeah, the economy's cooled off and a little bit, but really, like, the cost of housing is just like crazy unaffordable because the interest rate, people just can't afford it. Right? So that is actually kind of like a slightly inflationary factor that we don't necessarily see in a lot of our numbers. Right? But I would be really careful about anybody that's saying, like, oh, tightening is not necessarily cooling the economy, and ergo inflation will come roaring back, and it's coming, and I got to warn you, yeah, you know, like, there's going to be crazy people out there saying that sort of a thing. But what they're doing is they're taking one story and they're blowing it way out of proportion. Because the issue here is that, like, so they might be pointing out a real effect that you see in the economy, but it's really difficult to put that in perspective and compare that with everything else that's going on to see how that really factors in. You know what I mean? That's kind of one of those things when the market is like, there's a lot of information, and what is the piece of information that actually matters at that time? Sometimes you just can't know. They're making another attempt to get back into that 23 area, but so far it's not happening. What I do see, though, is since the news, a slow and gentle drop off in activity and cumulative delta slightly to the downside. There's a cool insight about how monetary plumbing operations affects economy and how rates can stimulate of discard of those ops. Yeah. Hmm. I forgot about this whole thing. We were talking about games earlier, and like what prompted us talking about that games was that Escape from Tarkov is a player versus environment mode that they're charging $250 for. How that's so crazy. Where do they come up with that? Like, no, who would freaking buy that? Yes, $250. That is dollars, right? I'm gonna bet you that it's some sort of like premium thing. I'm gonna bet you that it's like, if you pay for our player versus environment mode, then you get access to certain items so that when you go back and you play the regular mode, you can just wipe the floor with everybody else. And so everybody wants to go and get the player versus environment mode so that they can be more competitive. You know what I mean? Like, there's got to be some, because that just sounds too crazy. Let's see if I can get more information. After what has to be one of the worst days for a game studio ever, Battlestate Games has finally released a statement to address the controversy regarding the new $250 version of Escape from Tarkov. However, it likely won't be what a lot of fans wanted to hear. Posting on the game subreddit, game director Nikita Boyanov announced that some of the features that are included in the 250 Unheard edition would also be given to people who own the Edge of Darkness edition. However, the biggest addition in the form of the new player versus environment game mode will only be given to them for 6 months. Then they will have to upgrade to keep playing. Can you pull up? Well, I have an ES DOM over here. Why would you want to see the MES? Not important. MES not important. Like, you want to see how much liquidity is at each price? All right. Oh, how come it's not showing me? That's interesting. I must have not updated my CME over here. Download instruments, CME, update. Probably like only did CBOT last time or something. Okay, now does it show up? Yeah. You got pretty decent liquidity up there. A couple of hundred contracts at every price. Enough for you to work with. What do you mean looks like Rhythmic wins? You know what? I'm not even showing all of the prices. Check it out. 64. Cool, now you can see everything. Yay, look at that. I mean, the liquidity should be the same. It should just be, if you're like looking at CQG, it just might see slight differences between the updates and stuff. Oh, do you not get as many levels? Or are the actual limit orders you're seeing different? That would be weird. If the actual number of limit orders that you were seeing is not the same, then you're probably looking at the wrong month. My max is 4,000 on each side. What do you mean by that? But there's only 100 on each. Okay, I don't know what you're talking about now, man. I feel a little lost. Having the micro or the micro treasury up there without the tick consolidation on, though, kind of makes me a little seasick, so I'm gonna move it. Moves too much. So in Utah news, you know, we're getting an NHL team, and so there's a subreddit, and now the people are like pushing. For some reason, there's this group of people. Wait, who's this? What's this guy's name? Here, come over here to like, who posts this? Oh, someone else. It's like all of a sudden they're trying to push it to be the Utah Mammoth, which I don't know. I don't know if I really care. I'm gonna bet you that Yetis win because I think that the public will just like Yetis better, but we'll see. But they're like trying to campaign for it now, and it just drives me crazy that they're trying to campaign for it and like downvoting everybody that questions it. They're like, yeah, Utah has a history of mammoths and everything. No, it doesn't. It'd be stupid. Mammoths are found everywhere in the United States. There's nothing unique about mammoths for Utah. I'm not quite sure I understand why they all like this. Yeah, hockey, ChatGPT. Yeah, everybody's making these icons with ChatGPT, which I sure hope that they get like real professionals involved in this and doing all of the research and everything. And wow, we got about 20 minutes left. Let's check out, see if we've got any. Let's see here. Our top story says George Soros is paying student agitators to whip up anti-Israel protests. Do we have proof of that? Oh, that is it really? Zero Hedge says how Janet Yellen will unleash another market melt up next Monday. I didn't realize that it was time for a quarterly refunding announcement already again. Remember, we had like some relatively major moves in the market when that happened last time. Soros is Jewish. I would say, yeah. Who is Janet Yellen? The Treasury Secretary. Okay, this is a story from the New York Post, so I'm going to go to the New York Post and read it on the New York Post instead of Zero Hedge. Okay? George Soros and his hard-left acolytes are paying agitators who are fueling the explosion of radical anti-Israel protests at colleges across the country. The protests, which began when students took over Columbia University's Morningside Heights campus lawn last week, have mushroomed nationwide. Copycat tent cities have been set up at colleges including Harvard, Yale, Berkeley in California, The Ohio State University, and Emory in Georgia, all of them organized by branches of the Soros-funded Students for Justice in Palestine, and at some, students have clashed with police. The SJP parent organization has been funded by a network of nonprofits ultimately funded by, among others, Soros, the billionaire left-wing investor. At 3 colleges, the protests are being encouraged by paid radicals who are fellows of a Soros-funded group called the U.S. Campaign for Palestinian Rights. The U.S. Campaign for Palestinian Rights provides up to $7,800 for its community-based fellows and between $2,800 and $3,600 for its campus-based fellows in return for spending 8 hours a week organizing campaigns by Palestinian organizations. They are trained to rise up to revolution. The radical group received at least $300,000 from Soros Open Society Foundation since 2017 and also took in $355,000 from the Rockefeller Brothers Fund since 2019. It has 3 fellows who have been major figures in the nationwide protest movement. Nada Lafi, a former president of the University of Texas Students for Justice in Palestine, was seen at an encampment at UT Dallas Wednesday making a speech demanding an end to the war in Gaza. Lafi, a former legislative intern for the late Democrat Congresswoman Eddie Bernice Johnson, graduated from the school last year with a degree in global business and is now a law student at Southern Methodist University in Dallas. In January, she was detained for blocking the route of President Biden's motorcade after he arrived in Dallas for the funeral of Johnson, her former boss. At Yale, U.S. CPR's fellow Craig Brickhead Morton was arrested Monday and charged with first-degree trespassing when SJP's branch Yalis for Palestine occupied the school's Ineki Plaza, the Yale Daily News reported. Brickhead Norton, a former intern for a Democrat Maryland Representative John Sarbines, emerged from custody to address a sit-in blocking traffic in New Haven. The most high-profile of the fellows is Berkeley's Malik Afaneh, co-president of the Berkeley Law Students for Justice in Palestine. She has been a serial speaker at an anti-Israel protest on the campus this week, which came after she first shot to prominence by hijacking a dinner at the law school's dean home to shout anti-Israel slogans, then accused the dean's wife of assaulting her when she asked the radical to leave. Jeez. Are you kidding me? Wait. Hijacking a dinner at the law school dean's house? Are you kidding me? That's so... Oh my gosh. Okay. The cash from Soros and his acolytes have been critical to the Columbia protests that set off the national copycat demonstrations. 3 groups set up the tent city on Columbia's lawn last Wednesday: Students for Justice in Palestine, Jewish Voice for Peace, and Within Our Lifetime. All the Gaza Solidarity Encampment students sleep in tents apparently ordered from Amazon and enjoy delivery pizza and coffee from Dunkin' Donuts, free sandwiches worth $12.50 from a manager, and organic tortilla chips, and $10 rotisserie chickens. Okay, so it is they're funding them to, like, they're paying for their food and stuff. Jeez. And an analysis by the Post shows that all 3 got cash from groups linked to Soros. The Rockefeller funds also gave cash to JVP. The fund is chaired by Joseph Pearson and includes David Rockefeller Jr., a 4th-generation member of the oil dynasty. On its board of directors, the nonprofit gives money to sustainable development and peace building. And a former Wall Street banker, Felice Gelman, a retired investment banker who has dedicated her Wall Street fortune to pro-Palestinian causes, funded all 3 groups. Okay, so it is there is absolutely the case to say that this is being funded. Why would Soros whip up anti-Jewish protests? Well, to be honest with you, while Soros is Jewish, I would not say that he is a pro-Israel or Zionist. And I don't know if he really even thinks about being Jewish as a major part of his identity, to be honest with you. I digress. I don't know him. It's one of the problems I always have when we talk about people, is because we end up having to talk about people a lot, you know? And I don't know these people. I don't really know George Soros. So I don't like some of the political causes that he supports. But at the same time, it's like, well, you are allowed to donate money to groups and things like that. So I'm glad. What they're doing is not illegal, but it is, something that people should know, that these protests are kind of maybe not necessarily organic. This reminds me of the TikTok thing. So something that happened with TikTok was like, TikTok thought that they could beat it. TikTok basically thought that, they'll tell all of their users, hey, they're trying to ban us, and everybody will get upset and start calling Congress, and then that will convince Congress to not ban TikTok. And so that's exactly what they did, is they got all of their users upset and made all of these things. Like, you'd get on the app and there'd be a special message telling you about, please stop Congress from trying to ban us and this sort of a thing. And then everybody started calling their congressmen. And you know what it did? Is it made all of the congressmen go, oh my gosh, these guys really do have influence, and, it's, control from the Chinese, and it is a concern. So them, what is the word that we use for trying to push an issue? Lobbyists. So them lobbying for themselves actually help pushed Congress more towards banning it. It backfired, yes. And that is so very interesting to me, because they basically said, like, look at the power that this app has. And they basically can control the algorithm in any way that China chooses. That's like a big problem. It is. I think it is. Somebody did this analysis, like, of hashtags, and they're like, okay, here's this particular hashtag and this particular hashtag. You're not going to see anything on TikTok that is pro-Taiwan. You're not. And it's not because nobody's interested in that, I'm telling you. It's because China actively suppresses that content. And are they pushing this Palestine thing? I don't think that it's TikTok specifically. But I think that the leftist organizations are putting a lot more into it than the organizations that support Israel. That's just kind of the way that works. Is like George Soros and his kind of like political allies, they play that game, and conservatives and everybody else don't. And so you will often see this thing where, like, an issue will just, like, seemingly take over. I gotta tell you, I saw something, this really triggered me. I saw this, it was just a TikTok image, but they basically said, like, here's a really easy rule of thumb to use when you're looking at things. Like, when all of the kids on college campus are protesting for something against the establishment, you know that they're right. And the example that they were giving was the Vietnam War. And I was like, no, that is not the way that this works at all. Let me tell you the reality. Let me tell you the reality of it. The reality of it is that the college kids are some of the most malleable people out there. And there is this thing that constantly happens over and over and over again, where all of the college kids will jump on board for some particular cause, and they all think that it's going somewhere and that they're part of this big moment and that it's going to be a big thing, and then all of a sudden it just kind of dies, and they're all like, what the heck were we doing? Because that's what happened in Vietnam. Is that, there was all these things, and then there was like the Kent State where some students died because they were shot, which shouldn't have happened that way. But you know what happened after that? a majority of Americans, 60% of Americans said that the shootings were justified after that. And Richard Nixon went on to get one of the largest election victories ever. So none of their left-wing activists protesting accomplished anything. It fizzled out and got the Republican elected. And I see a lot of parallels to it. You say Occupy Wall Street? Yeah, first it was Occupy Wall Street, and then it was Black Lives Matter, and then now it's this pro-Palestinian thing. And they're all being driven by the same groups, and they're all like the same sort of thing. Like, go and look at the videos of these protests at Columbia. They look exactly like the protests from Occupy Wall Street. They do the whole mic check thing where the organizers of the protests will say something, and then all of the people in the group will repeat what they say. Using the same sorts of tactics. It's like all the same culture. Occupy Wall Street, we think of this as this push against the rich and yada yada yada, but really what it was a training camp for activists. And now they're growing old and they're passing it on to Gen Z. Is what it really is. And so when you see those protests, you should be extremely skeptical of them, because the reason they do it on campuses is because it's so easy to manipulate those kids. Do you see this video where there was like this girl and they're like, what, so what are you protesting? And she had absolutely no clue why they were even there. There's going to be a lot of people like that. It's very easy to just get the kids to all like jump on board a bandwagon. You make it appear popular enough and this and that. But the end thing, I guess, is kind of the good news is that these things always fizzle out, right? So I wouldn't surprise me in the least bit. In fact, at this point, I would say pretty confidently that these protests against Israel are helping Donald Trump. Donald Trump is even more likely to win the election now because of all this. It's not just helping Donald Trump, because a lot of people are looking at this and being like, well, okay, I don't like the right and Donald Trump and everything, but these people are talking about killing Jews, so like I'm not going to vote for them. But then on the other side, it's actively hurting Biden, because so many of his most engaged base supporters absolutely hate him now, because he's trying to like play both sides and help Israel, but like placate his base. So it's actively hurting Biden. Whole thing is interesting. Yeah, that's about to drop the red pill. Is that the red pill? I don't know. I feel like that a lot of my life, like what I tend to be interested in, by the way, the dollar is just like on a tear right now. I don't know what's with this, but the dollar is just going and going, and the Japanese yen is just like falling and falling and falling. So is the euro. Jeez. Maybe it's just dollar flight for the weekend. I would think that dollar strength would harm the S&P 500, but it's not so far. Almost time for me to go. I feel like that the things that interest me the most are the, cases where it seems like everybody's wrong. If I can find information that most people don't know, that's what I like. I want to know the things that other people don't know. I want to, find the places where everybody is wrong. That's where the real value comes from. That's where real innovation comes from. That's what I'm the most interested in. But sometimes I look at these things and like, I think that what I'm saying is kind of a bit of a red pill. But at the same time, I'm kind of like shocked that other people don't know that this is how it goes. Like I'm shocked that the general American public doesn't realize that the Vietnam War protests are actually generally considered historically a complete failure. Like it didn't end the war in Vietnam, and it didn't help the far left political cause. It kind of killed the left-wing political cause, actually. Can Trump win if he loses Pennsylvania? Yes. So let me show you something else real quick. So Real Clear Politics have set up a new website called Real Clear Polling. So you can look at these things like the election. Real Clear Polling electoral map. Okay, so this shows you the electoral college map, and this is kind of like the current. So this would be the same thing that you would see 270 to win. Okay, so and they have these like quick ones too. There's a Senate map. Okay, but one of the ones that they have is no toss-up map. So this no toss-up map is okay. You know, we don't worry about leans or likely or any of that. And even the ones that are in the middle, we're just going to say, you know, if it's 51% for the one guy, he wins it, whatever, right? Okay, so look at the no toss-up map. No toss-up map says Biden 245, Trump 293. And you can see there, look, Pennsylvania is blue. Pennsylvania is blue. So in the current map, Trump loses Pennsylvania, but he gets Georgia, Arizona, Wisconsin, Michigan. He also loses Minnesota. That's kind of interesting, but yeah. Pennsylvania is probably a toss-up, you know, in my mind. So it is actually, that is way closer than that 245 to 293 it appears. Okay, but it probably is the case that if an election were held today, Donald Trump would win. And I think that the current political landscape kind of gives Trump a little bit more momentum here. At some point it flips around and Biden has his time, but just keeps not happening. So we'll kind of have to see. You have to be careful. So one of the things that happens, for instance, is like there are people running for governor and Senate and all of that sort of stuff. And the candidates are not necessarily picked yet. So it's not until you get to like the end of the summer when the parties do their conventions and all of the candidates are chosen that the polling really becomes super useful. So that's like the huge caveat, is that if the election was run today, Trump would win, but the polling is likely to change significantly once we find out who's who, right? And hopefully we don't have any cases where the Republican running in these places like Wisconsin, Michigan, Arizona, Georgia are the places where I'd be the most concerned about, and Pennsylvania, that you have some crazy, you know, you have a Majorine Taylor Greene that wins the nomination sort of a thing, because that can really hurt the Republican turnout. But that's a long ways off. Remember, Memorial Day is just around the corner, man. Memorial Day is just around the corner, and then like things shift. So I think that we got like a new era here, starting with the Federal Reserve meeting. The market will probably go through a little bit of a transition phase, and then we'll go into the summer market, and we'll see what the summer market is like. In the midst, I missed that comment. In the midst of a truancy crisis, yeah, that thing is a little. I think that may actually be a little bit exaggerated. So what do I mean by that? I think kids are late or truant a lot more often now, but a lot of them are acting like the kids are like never at school anymore, sort of a thing. I don't think that's actually the case. So the possible negative effects from it may not be as extreme as some people that you can see talking about it on TikTok make you think. Okay, well, it's time for me to get going. So no trade for me. I'm pretty happy. You know, like looking back on this day, well, I don't know. I mean, I took a trade. I think I totally took the trade that I wanted to too. So let's just come in and do this. Results. Took long on pullback. Took profits for the news. Before sentiment news. Market didn't do much after that. So I'm pretty happy with my results today, I think. Even though it was just a sim. I'm a little bit nervous still about like putting trades on over here. I really gotta feel like I've got like know what's going on. But you know, I think that I got did a little bit of research that might help us there. So guys, Monday, and hopefully I have a video for Monday. I'm in big trouble if I don't post a video Monday. Be big trouble with myself. So look for that. In the meantime, stay excellent.